Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. PharmEasy begins layoffs amid funding crunch and mounting losses. The move comes after the e-pharmacy unicorn delayed its IPO and failed to raise funds even at a valuation cut. Number of employees sacked remains unknown.
Nandan Nilekani tells CNBC-TV18 the funding winter will cleanse the startup ecosystem and make it more robust, with founders becoming frugal in their approach, but says he fails to find a reason for cryptos to exist.
In what's a first for an Asian sports person, Indian cricketer Shikhar Dhawan sets up a $75 million global venture capital fund to back startups across the spectrum of sports, including gaming, esports, Web3 and more.
Angel investor network FAD gets SEBI approval to launch a 300 crore rupee fund to back early-stage startups across health tech, agri-tech and more. An early investor in Blue Smart FAD network has backed over 60 startups.
Java Capital launches its new seed fund with a target corpus of 75 crore rupees. The backer of Agnikul and Kuku FM looks to invest in 15 to 20 early-stage startups with a focus on deep tech, SaaS, climate tech, sustainability and more.
After a failed rollout last month, Twitter relaunches its subscription service for the blue tick badge, but iPhone users will have to pay more. Meanwhile, Elon Musk confirms he may increase tweet character limit from 280 to 4,000.
Twitter is both a social media company and a crime scene, says a cryptic Musk tweet, after part 3 and 4 of Twitter files were posted online over the weekend, which revealed Twitter's questionable content moderation tactics. Those were the headlines that we're tracking for you this evening, but on what's brewing today, and it's a CNBC-TV18 exclusive, the tough macro environment and ongoing funding winter for startups will cleanse the system and force companies to be sharper focused and more frugal in their approach. That's the word coming in from Infosys co-founder and chairman Nandan Nilekani. In a freewheeling chat with CNBC-TV18's Ritu Singh, Nilekani spoke about the next big digital moment for India, CBDC versus UPI, and a whole lot more. Take a look.
No, I think they have done the right thing, because the earlier draft, because there's so many suggestions, it had become bulkier and bulkier, and it had so many clauses. Yeah. And I think they decided, rather than take that, they said, let's take that learning, come back with a much more succinct and much more thoughtful version, which they have done. And once you have this law, then you can pass additional laws and additional regulations. But you have the basic framework. So I think this is the right approach. Well, I think finally it's about solving challenges and giving benefits to people. So UPI has given that benefit of zero cost instant payments. And but I think there is the anonymity benefit of CBDC. And I think over time, as people start using this, they will figure out more use cases, both on the retail side as well as on the wholesale side. Fundamentally, we have to realize that the RBI is one of the most progressive and forward-looking regulators there has been.
We're proud as a nation to be the third largest country when it comes to number of startups. We have more than 100 unicorns, but they've raised capital in what has been a tough environment now, and we're seeing mass layoffs, restructurings, shutdowns in worst cases. How do you think the scenario is going to play out from here?
Well, I think in some sense this is going to cleanse the system, because if somebody doesn't have a very viable business model and has essentially depended upon a lot of capital to build, that's no longer valid. But I think so it will force companies to become much sharper focused, much more frugal in their approach, more focused on solving real business issues. And I think at the end of this, we'll have a very good set of robust, healthy companies. So I think this will lead to a good outcome.
But do you think the situation is going to get a little worse before we see some sort of an improvement? Or how would you compare it to the previous cycles that we've seen, whether it was 2008, 2015, these tech booms and busts that we've seen? There is a lot of dry powder with investors, but they're a little risk averse at the moment. Sure. So where do you see light at the end of this time?
We don't know how this will pan out, because the startup boom of India began only 5 years back. Yeah. In 2016, we had only 1,000 startups. Now we have 90,000 startups. So the first time that the startup world has encountered this kind of challenges. So we have to see how it goes. But I think at the end of it, it will lead to a healthier, more robust, more frugal, business-oriented ecosystem.
3 things that Indian startups are doing right today.
Ambition, execution, and getting product market fit right.
What are the three things that they're doing absolutely wrong?
I think spending money to acquire customers, not being frugal enough, and not getting their product market fit right.
Are unicorns going to be a more rare sighting as they should be now?
I think maybe the numbers may come down, but anyone who becomes a unicorn now will be there because they really create a great company.
All right, next set of unicorns will create great companies, says Infosys co-founder and chairman Nandan Nilekani. Moving on, Java Capital, a seed-stage-focused SEBI-registered alternate investment fund, has announced the launch of its first fund with a corpus of 75 crore rupees, including a green shoe option of 25 crores. The fund has achieved its first close at 30 crores and expects to do a final close in the next 6 months. The newly launched fund has already started investing in pre-seed to pre-series A startups and plans to build a portfolio of 15 to 20 startups with an average first check size of 2 crore rupees. The fund will reserve 50% to make follow-on investments into top-performing portfolio companies. Joining us now to discuss this further is Vinod Shankar, the co-founder and partner at Java Capital. Also joining me is my colleague Arundhati. Vinod, you've launched a new fund and you've seen the first close at 30 crore rupees. You've already started deploying these funds. Take us through the startups you've invested in. Also, if you could talk to us about your approach to betting on outliers and finding breakout sectors.
Hey, thanks, Shruti and CNBC, firstly, for having us. On the companies that we've invested, right, we've invested in a SaaS company based out of Chennai called AuditQ. That was the first one to go with. And we've done another company called Pre-Image, which is building digital twins for infrastructure, for the likes of mines, dams and large real estate projects. Basically, it helps in measurement of, volumes or volumetric analysis, in a mine or a dam, right? That's like an interesting space, it's a deep technology company. And we're doing a third one in the aerospace sector, which is building a long endurance drones with solar panels. This has potential applications for both defense and also in marine monitoring. And given the amount of action on the defense side, especially given the border situation, I think startups in the deep technology space like this, have a real potential to start selling to the defense forces. That's something that we're taking a long shot on. And lastly, we are also investing, given the tailwinds that's coming through because of the China Plus One strategy, in a managed marketplace company, which will help in light engineering and the likes, so that manufacturing can be placed from outside India and India. Yeah.
All right. Vinod, like I mentioned earlier, you're looking to invest in pre-seed to pre-series A funding. We've in fact seen a shift of money flowing into early stage startups versus later stages. What is the reason for this shift and what's the rationale of betting on companies in the early stages?
No, I think, frankly, the mid-stage, there's money that's dried out. So what's happening is money is either shifted to public markets because it's cheaper, or is shifting downwards, towards pre-seed, seed, to try and get into companies very early, which I think is a strategy in most firms, to try and get into companies early because, that's when, you can get good ownership. And the fact that we only play this stage, right, is a great advantage. And this is a stage that we've been playing for some time now. That kind of provides incentives. But people who are shifting downwards, right, sometimes I also tend to think, it's an optionality that they're taking off so that if they perform well, they can go back and invest again into those companies. That's possibly what's happening in the ecosystem as we speak today. Yeah.
All right, like you mentioned, hi, Arundhati here, by the way. You're focusing on sectors like deep tech, SaaS, enterprise tech, fintech, and sustainability. Can you tell me why you're betting big on these particular sectors, and which sectors do you think will see the most amount of funding?
I think, we're going very long on deep technology companies like Agnikul and Sinler and ePlane, simply because, we see a very long-term story for deep tech coming out of India. And the other sector that we are super gung-ho on, currently looking at is climate change and sustainability, which I think is not just seeing action in India. Actually, there's a lot more action globally also. And we've also seen, dedicated funds on climate change. I think, for the next couple of years, I would very closely look at climate and sustainability along with the deep tech portfolio, which kind of lends itself very well, if you would synergistically, to bet on deep tech and, climate in the same areas, right? I think that's two areas that I would be super gung-ho on over the next 2 years, and we are willing to take long shots, even if the waiting period is a little longer than typical consumer companies,
Right.
if you look at, yeah.
Yeah, so sustainability and deep tech is what you're focusing on. Now, you've previously invested in companies, like you said, like Agnikul, Kuku FM, BharatX, better options in the e-plane company. So what are your assets under management and how are your portfolio companies performing at this point?
Our current assets under management are roughly under 5 million, given we are a pre-seed seed stage fund so far. And also, what we look at closely is in these sectors, right? Try and play early and get into making some of these real alpha bets, which is not possible otherwise.
Okay. Vinod, I want to talk to you about exits. I know it's early, but is that something that you're looking at? And what's your exit strategy going to be?
Sure, exits, we have a clear strategy in our minds. Typically, right, we want our companies to reach anywhere between 150 to $200 million kind of valuations, given that we come in really early. We won't take some chips off the table at that stage and, leave the rest of the portfolio at risk, for a much larger upside. That's like a sound strategy that, we've kind of, adopted. We've not yet had any exits, given the average age of the portfolio is roughly around 18 months as of now, the previous ones. I think we'll start seeing exits, in a couple of years from now on. Yeah.
All right, couple of years from now is when you'll see some exits. Now, as 2022 is winding down, we've seen what we can call a funding winter. What are the trends you expect to see in 2023? Will we see a pickup in investments?
No, I expect the second half of 2023, we should expect to see a significant pickup in investments. And I also see, the pre-seed seed stages, still super active. The B and C might have, dried up, but, we see a lot of action at the pre-seed and seed stage even now. So I only expect, second half, it should start picking up even at the growth stages, so that, there's a lot more money for companies that we invest now as they grow into over the next 18 months, right? Capital should start coming through. That's what we are optimistic about, that the funding winter will not last, more than say, 18 months at the go. Yeah.
All right, Vinod, that's good to hear, but we've completely run out of time. Many thanks for joining us on Startup Street today and wish you the very best with this fund.
Hey, thank you, both of you. Appreciate it. Thank you.
On that note, it is time for us to head into a short break. But coming up next, online meat brand Licious forayed into spices with the launch of specialty spice mixes to complement its chicken and meat products. A special conversation with the co-founder, Vivek Gupta. On the other side, stay tuned.
असली विलन तो तू है अपनी फैमिली का हीरो बनो यार। 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 390 रुपए महीने से शुरू फ्रॉम पॉलिसी बाजार।
अरे आप इतनी दूर हमारे लिए?
आपकी मेहनत कहां से कहां पहुंच रही है। मैं आपके एक साइन के लिए यहाँ नहीं आ सकता। हो गया आपका अकाउंट ओपन।
हर बंद राह ओपन हो सकती है, लगता है सिर्फ दिल।
धन्यवाद।
एक्सिस बैंक, दिल से ओपन।
ये लो अब खाओ कद्दू। इसके चक्कर में 2000 का चालान लग गया।
बाइक इंश्योरेंस रिन्यू करते तो नहीं लगता ना पापा?
अच्छा, इंश्योरेंस कितनी महंगी है पता है? मैं यहाँ पैसे बचाऊं, सस्ते कद्दू के चक्कर में 15 किलोमीटर दूर जाऊं, कोई कदर नहीं है मेरी।
2000 रुपए का सस्ता कद्दू?
बाइक इंश्योरेंस महंगी पड़ रही है। प्रीमियम स्टार्टिंग एट जस्ट ₹1.5 per day on फोन पे। टेंशन फ्री इंश्योरेंस।
While the new India is at the cusp of structural transformation and rising to global significance, there are many who are endeavoring to make it sustainable and inclusive for all. Let us celebrate the stories of such change makers. Coming soon, the grand finale of Network 18 presents Badlav Humse Hai, powered by AU Small Finance Bank.
Making the future truly forward and charting a path towards gender parity.
How do we accelerate the pace of inclusive, resilient, sustainable growth will be a key challenge before the leaders of the world. The PM has emphasized in his Bali speech very strongly that women constitute more than 50% of India's population in the world as well. So you can't grow at rapid pace till women-led development, and he's used the word women-led development, and therefore how do you bring in greater level of leadership? How do you bring in greater financial inclusion? How do you improve health, education outcomes, learning outcomes for them, and how do you put them into positions of authority and power?
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Welcome back to Startup Street. Drone startup Garuda Aerospace is looking to close its Series A funding round in the next 2 months and is targeting a ticket size of $15 to $20 million in equity. The company's founder and CEO, Agnishwar Jaiprakash, spoke exclusively to CNBC-TV18's Jude Saneth about the company's fundraise plans, the dearth of skilled drone pilots, the new 5G-enabled drone they're working on, and their partnership with Swiggy. Here's a slice of that conversation. Listen in.
Logistics is a huge industry, and when we've been doing a lot of pilot trials with Swiggy, we've realized that there are multiple ways in order to address the problem. Not just end-to-end delivery, there's also a hub and spoke model where you can deliver to a delivery boy who might be located near the space, and then he can take it up, right? Otherwise, you're looking at rooftops, we're looking at ensuring that there are drone ports, so a lot of aspects. But where we see those learnings being put to use is in rural India. We're taking the same learnings and we are utilizing in rural India where there aren't too many electricity lines, there aren't too many trees, there's acres and acres of farmlands, and ultimately we are able to create a lot more impact because those guys require medicines at a shorter duration of time, and we believe the same technology that we're utilizing for Swiggy now, thanks to our partnership with Lockheed Martin, and they have an amazing software which is being loaded into our drones to live process data, which is amazing for us. And what we intend to do in the future is not just in logistics but also in defense, industrial inspection, as well as in agriculture. We will be able to get live feedback and processing from the places where we are providing all these services, and we will be able to utilize cloud-based servers to process that information and relay back useful information which can help clients make informed decision making.
But insofar as Swiggy is concerned, do we have a timeline in when we can get deliveries via drones? Is that out yet?
Yes, I would assume that in the first quarter of next year, you would definitely see you probably getting pizzas delivered to your door.
I have to ask you, the number of Indian startups in the space has grown by 5x in the last few years. Can we see Garuda make a dash at that final frontier as well? Is that something on the cards?
Absolutely. I mean, we'd like to always cement and do well what we're doing currently. We do not want to be jack of all trades, ace of none. We want to be ace of all trades, right? And we're building very good fundamental blocks. Ultimately, we are, and now you're getting a lot of information out of me, but we are designing a 5G-enabled drone which can revolutionize telecommunications in rural India. So as the 5G revolution in India is getting started, we believe that, and there are only like 2, 3, 4 players in the market, but there is a dark horse in form of drone technology which can be utilized for telecommunications and provide connectivity and help 5.5 to 6 lakh villages be connected. And that is the vision of our Honorable Prime Minister, and I'm happy to serve.
Pre-Series A round of $1 million, recently secured $5 million from high net worth individuals, an infrastructure company, and a few others. I just want to get a sense from you in terms of when your Series A round will reach its completion and what kind of number you are looking at.
Our Series A round will probably close in the next couple of months. We've received a large VC fund who is well known. I can't reveal much information right now, but you will hear in the next 2 months that we would have closed our Series A round, and we will be looking to deploy these funds in the right places and ensure that we are scaling, we are conducting the drone yatra, ensuring that we have strongholds in all 775 districts throughout the country. We will ensure that a lot more youngsters are skilled who will be able to utilize this technology, thereby they will be able to buy Garuda drones and execute a lot more services. Today, the major problem that Garuda has is that we don't have enough hands. We do not have enough drones or service providers to cater to the service contracts that we have bagged. We have close to $1.8 billion worth of exclusivity contracts with us, but we are not able to execute because we do not have sufficient number of skilled drone pilots as well as the number of drones that are out there. So with our focus on unit economics, we want to stay asset light, but at the same time ensure that our technology keeps improving and drones are becoming more and more autonomous as the day progresses.
Is there a ticket size you have in mind in terms of the Series A round?
Yeah, I think we would probably close anywhere between $15 to $20 million in equity and another maybe $7 to $10 million in debt in the next couple of months. But for me, like I told you, we've always been a customer-funded growth company and not an investor-funded growth company. Right. I have always raised only as much as I have generated in terms of revenue in the past. And going forward, our investment strategy is very simple. It is not just to receive checks from investors. It is always about identifying investors who will grow along with the company, who will ensure that they will add more value, guide me and advise me in our path to become the first ever drone unicorn startup by 2023. Right. So our focus is not just reaching the unicorn status by revenues and EBITDA multiples, but is by impacting 1 billion people and making their lives better. And I believe when you impact 1 billion lives, you're automatically a unicorn.
Meanwhile, online meat brand Licious has forayed into spices with the launch of specialty spice mixes to complement its chicken and meat products. In a conversation with my colleague Shilpa Rani Peta, the co-founder Vivek Gupta says the company sees a need gap with there being very few options for specific recipe cooking. Here's a slice of that conversation.
Yeah, so we have come up with 8 spices in the beginning, and some of them are like tandoori chicken masala, butter chicken masala, fish fry masala, meat masala, etc. So these are, not generic but specialized recipe backward masalas. There is actually one generic category also, asli garam masala. We will obviously launch on Licious platform first in the top 8 cities, and then we will add online channel partners where Licious is already present, like Swiggy, Dunzo, Blinkit, etc. We will also look forward to partnership with the other online players like Amazon and Big Basket. And at some stage, after getting consumer feedback, we'll think of channels even in the offline market, but that is not on cards for first few months.
And Vivek, you're entering a space that has some very established spices brands, and it's also a space that's seeing massive traction among large companies too. So what's your value add here, and how do you see the competitive landscape in this space?
Actually, it's a fair question, but there are two, clear need gaps which we understood from consumers. One is the need gap is, there are very fewer options when it comes to recipe cooking. There are a lot of masalas like garam masalas, powders, etc. But when you have to cook a special variety of a cuisine, I think those options are very, very limited. So that is one need gap. Then consumers also don't understand, how much masala to add, etc. That's why we have come up with the sachet packs. So I think the specialized experiences are, I think, still missing in the market. That is another learning.
So you've launched 8 new products now, right? Are more on the anvil, and are you looking at just meat spice mixes? What about other generic spices too? Is that on the plan?
There is only one masala, which is, garam masala, which is the generic masala, but all other 7 are specific meat recipe masalas. We see the idea is to stay in and around meat and, make impact in those cuisines when that woman at home is cooking. So that is how we are looking at masalas, not like going into categories and launch coriander powders, etc. That is not the intent here.
So Vivek, you also recently forayed into plant-based meat, right? I wanted to understand, how's the response been there so far, and are you expanding your product portfolio there as well?
The product has been rated very, very highly by consumers. There are thousands of trials which got generated in just last 3-4 weeks of launch. So we are really looking forward. We have right now only launched 2 products. There are 5 more products which will go out in the market in next 60 days. So I think excitement is there, but yet to see India accepting vegetarian options on which taste like meat, right? It is a slightly futuristic call which company has invested in. Our thinking is that meat eaters who don't eat on particular days because of festivities or Tuesdays or Thursdays. I think this offering will more fit those kind of consumers.
And Vivek, lastly, your FY22 revenue grew over 60%, but the losses expanded at the same time to around 850 crore rupees. So by when do you see Licious turning profitable?
Yeah, so profitability is not very far. I think in next 12 months we should become a cash generating company positively. A lot of work has happened in last 12 months on those aspects. So I think that is a very, very good news. In next few years, we will also start thinking of IPO once we are in the state, of announcing dividend every year. So that is the intent. While we are working on this piece, the company continues to grow at a good pace. So year on year, we are still expecting to grow 50-60% from here on.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.